Right, we've technically started.
Thank you so much for joining our webinar today. We're going to be diving into the sales and impact data that we've been collecting that will tell us about the trends and the changes that we've been seeing in the first half of 2025. And my name is Susie Wielden. I head up our knowledge and research work here at GOGLA, and I'll be joined by my colleague Oliver Reynolds, who heads our data and insights activities. And Oliver will be taking us through that data so that we can see those trends and changes, dive into the countries and regions, look at different business models and technologies. And then we are going to have three fantastic speakers joining us today to really give an experience of what is happening for their companies at the moment and how those trends and evolution of the market is affecting their business. And we have Delight Sun Culture and Namane joining us, and we'll introduce those speakers a little later in the conversation. We'll also have some time for questions and answers at the end. So please do pop some questions into the chat as we go through, and we'll be able to ask those to the panelists and to Oliver. Please, if there's a particular person that you want to target with those questions, do add that in so that we can identify the right person. And then right at the end, a really exciting announcement around GOGS for 2026, and linked to that, actually, one lucky member who's contributed to the data collection exercise gets a free ticket as part of a raffle for joining the exercise. So both congratulations, we'll reveal that person at the end, or that organization at the end, but a thank you so much to all of the companies that participate in the data collection. We cannot do this without you. And also to our long-term partners, IKEA Foundation and Efficiency for Access, that support the exercise. One last thing to give you a bit of warning, and I think the first one's about to start in a moment. There will be some polls that we're running as part of the agenda today. So watch this space, get your fingers ready to participate yourselves as well. And so with that, let me hand to Oliver to take us through the data.
Thanks, Susie. I'll launch the poll now. So this is a bit of a who's in the room type poll. So yeah, if you can just select the category of organization that you feel best represents your organization. I'll give it a few seconds. Once there's a decent number of responses in, I'll close and we'll get on with the actual results of the sales data. Still pouring in. All right, it seems to be slowing down a bit. So we don't have everyone. Can you see the results? Yeah, I think you can now. So yeah, I see we have quite a few companies operating in primarily SHS solar lamps and solar generators, quite a few financiers as well, and then a mix of, I'm guessing GOGLA staff, researchers, consultants, development partners, etc. And yeah, I guess a bit less than half of the people responded to the survey, so we must have a slightly more diverse group. But yeah, now without further ado, let me jump into the data from this round. So maybe before I go into the results that are on the screen, maybe as a general kind of for framing, for those of you who are a bit less familiar with our work and our data, the data that we're presenting today is based on data that we collect every 6 months from companies that we refer to as GOGLA affiliates. So they're either GOGLA members, companies that have a Vericel certified products, or companies selling appliances that are affiliated to programs like Leia. And so as you see on the screen, the data that we're presenting today, because we're looking at the most recent data is the data for the first half of 2025. We're looking at data by half year. So from 2022 H1 being January to June of 2022, and 2022 H2 being July to December of 2022, and so on and so forth until the first half of 2025. So in terms of the overall market for solar energy kits, which is lanterns and solar home systems kind of grouped together, we can see that sales in Sub-Saharan Africa have been kind of a nice kind of growth trajectory for the past few years. The H1 2025, sales of solar energy kits is actually the highest in terms of total volumes for like the first half of the year in Sub-Saharan Africa. As you can see from the chart, those sales tend to be seasonal. So yeah, H1 part of the year tends to be a bit lower than H2. So this is the best January-June period recorded for Sub-Saharan African sales since we started recording or since Lighting Global started recording in 2010. And as you can see, it's just a 1% growth versus 2024 H1. And it'll be interesting to see what comes through the second half of the year, notably with some programs kicking off in major markets, and seeing if 2025 can overtake 2024 to be a new best year for sales of solar energy kits in Sub-Saharan Africa. As you have noticed, I've been talking about Sub-Saharan Africa, the chart as Sub-Saharan Africa focused. We do get sales data across all continents in our sales. We chose to focus on Sub-Saharan Africa this round because there's just so much happening there. But for those of you who are also interested in the bigger picture, just so you know, if we look at global sales, the picture's a bit different. Sales are actually down year on year compared to the first half of 2024. And that's mostly driven by decreasing sales in Asia. And that's quite a structural decrease in sales because India was traditionally the largest off-grid market in the region, and its electrification rates are now so high that it's progressively marginalizing the sales of, let's say, traditional off-grid solar products. There are other products that our members sell that are quite successful in India, but the traditional kind of solar home system, solar lantern sales have been progressively declining. And we also see decreases in regions like the Middle East, which are kind of linked to humanitarian sales, which I'll touch on a bit later, and one of our members will touch on as well. So I'll now move on to kind of what's under the hood of this, which is PAYGo and cash sales. So on the chart here, you see PAYGo sales in blue, cash sales in yellow. The main thing that I want to say is that obviously PAYGo sales have been growing incredibly fast over the last year, 54% year on year sales growth. And it's the highest PAYGo sales that we've ever had in our data, including at the global level. Whilst cash has taken a bit of a stumble in 2025 in particular, and actually it was the 32% drop compared to the first half of 2024. This is the lowest cash sales that we've recorded since 2020, when sales during the pandemic were even a bit lower than this, but not much lower. And so yeah, this ties to several different underlying factors. As I mentioned before, I'll start with the cash sales. The companies we've talked to highlight a mix of effects. In part, there's been challenges with some international development aid programs coming to an end in different regions in Sub-Saharan Africa, but also, as I mentioned earlier, in the Middle East. In 2024, we saw sales of lanterns that also cash vast majority of the time to places like Ukraine, Jordan, Afghanistan, etc. We don't really see as much of that in 2025 so far. And yeah, essentially humanitarian context being quite directly affected. And then on the PAYGo side of things, obviously there's been kind of the private sector rolling out into new markets. There's been kind of organic growth in some markets. But it's also true that there's been quite a lot of result-based finance programs that have come online or reached their full potential recently, which has led to, and a lot of these RBFs are kind of disbursed through pay-as-you-go companies, and that has been a driver of this increase in PAYGo sales in recent rounds. So that was kind of the big picture for solar energy kits in the region. I'm now going to move to appliances and talk about the big picture there, and then we'll look at a few specific countries. So on Sub-Saharan Africa on appliances, so the main appliances we track, for those of you who are not familiar with the work we do, are fans and TVs, which in Sub-Saharan Africa are in the vast majority of cases sold bundled with a solar home system in the kind of the part of the market that we look at. And we also look at solar water pumps and refrigeration units on the kind of more productive appliance side of things, which I'll get to in the next slide. We've also started tracking, but I won't talk about it in the data today, but we also started tracking solar generator sales and walk-in cold room sales. And there are a lot of other appliances that our members report to us, such as radios, barbershop equipment, solar mills, etc. But today we'll focus on the first four that I mentioned. So if we look at the, let's say, household appliances, We can see that fans have grown quite significantly over in the current round. This is highly tied to return to growth in Nigeria, which I'll touch on in more detail in the next slide or next couple of slides. But essentially, yeah, Nigeria has now become the biggest driver of kind of total appliance sales volume, just because of the volumes of fans that are sold in Nigeria. 3-4 years ago, I would have said that the major driver is TVs in Kenya. That's no longer the case. So as you can see in the chart here, fans bouncing back after a bit of a lull, which is also linked to the different programmatic interventions starting and ending in Nigeria. And TV sales, we saw a bit of a cliff edge in 2023. Some companies started reporting a lot less TV sales. Hopefully the trend that we're seeing was 2025 H1 being a few percentage points above 2024 H1 is a sign of a slight return to growth in TV sales, but we'll need more data to be able to verify that. I'll move on to productive appliances. So we have solar water pumps and RUs, which are refrigeration units, so fridges and freezers essentially, or multi-temperature fridges. So as you can see, there's a bit of a drop in both solar water pump and refrigeration unit sales. I should say on the solar water pump side, that is in part due to changes in participation, so the number of companies reporting. Likely that 2025 H1 would be closer to 2024 H1 in reality. But so yeah, kind of stagnating. It'll be interesting to see what the data says in the second half of the year to see if how 2025 as a whole looks in comparison to 2024. Refrigeration units struggling even more. We're not seeing the kind of growth that we hope to see through the companies that are reporting to us in the region. Maybe notable as well that obviously over the last few rounds, one of the companies that had been reporting kind of steadily to GOGLA ceased activities. We've seen that happen in the past as well. A few years back, there'd been kind of a first wave of manufacturers venturing into the kind of DC fridge space that later exited the market. It'll be interesting to see how the companies that are still doing relatively well perform over the next few rounds, and if the increasing kind of donor interest in productive use also kind of helps scale this space where I think in many cases companies are kind of still figuring out the product market and access to finance mix. Before I go to the next slide, which will look at kind of country level trends, I wanted to launch a quick poll, if I can find the polls, to ask you essentially to play a bit of a guessing game. So on the next slide, we'll look at the different countries in Sub-Saharan Africa. I was wondering if you could try and guess which country in Sub-Saharan Africa would have showed the biggest absolute growth in volumes of solar energy kits. So not the highest percentage growth rate, but in the number, the additional number of units sold compared to a year ago, essentially. All right, results have started to come in. There's a clear lead there already. Let's see. Responses are slowing down in the poll. All right. So you all kind of agree on Nigeria gets a vast majority, well, a majority of the votes. Ethiopia, Kenya, Malawi, Uganda, all getting a small share of the total. And let me take you to the slides again. Apologies, because I've got 1,000 things open on my end. Here we are. So this is a bit of an overview. I know it's a busy slide of what's happening in Sub-Saharan Africa. I've only looked at the main markets. So we looked at markets that have kind of, I think, at least 25,000 units sold per 6 months period. I think two things. One is, obviously, you can see that the vast majority of markets are still in East Africa. I think another noteworthy thing is that apart from Kenya, which is kind of stable, Zambia and Togo, which are kind of single-digit growth, everything else is kind of big swings in one direction or another. It's double digits up or down. which is interesting. And so the response to the real answer to the question that was in the poll before is actually Uganda. So Uganda saw 107% growth for if you compare sales during the first half of this year to sales during the first half of 2024. And that translates, that's a kind of plus 200,000 or plus 220,000 units compared to the same period last round. I'm not going to go into all of the countries that are on the slide, but I'm going to touch upon a few of them. So I'll start with Uganda because we're already talking about it. In Uganda, obviously, the EASP RBF program has been a major factor in accelerating sales. So yeah, as I said, massive growth, both in percentage and absolute volumes. But I won't go into more detail on that because I think one of our panelists will touch on it. I'll kind of go down the east coast. Rwanda and Mozambique I'll talk about together because it's kind of the same situation. So those are two countries that were benefiting over the last few years from RBF programs or subsidy programs in different forms. And they're both kind of in the transition phase. So Rwanda's initial RBF has ended. The Ascent RBF, World Bank funded, that will come in, or which is supposed to start relatively soon, is kind of at the kind of contract signing phase with distributors and companies. So it created a bit of a dip in the market between those two programs, and there were changes in eligibility criteria for participation in the new RBF, which probably led to a bit of a pause in orders of new products. So yeah, massive drop, hopefully very temporary, and we expect to see sales pick back up in the second half of 25 and into 2026. So it'll be interesting to see what happens there. What else? Tanzania is interesting, massive growth, and it's not programmatically driven. There is an RBF in Tanzania, but it's quite specific and focused, I think, to Zanzibar or the islands. So most of the growth is actually coming from players rolling out in the market. I'll group Malawi and Madagascar together. They're two countries that have been benefiting from ongoing support from interventions. So the Mwingwe Fund in Malawi and OMDF, and now DSIM in Madagascar. I'll quickly talk about South Africa because we don't usually consider it as one of our main markets for GOGLA members, but increasingly with kind of the backup to the grid, we've seen players sell in that market. In 2023, 2024, there was a bit of a peak of demand as the grid was really suffering, and we saw a big increase in demand for off-grid solar products as backups. It'll be interesting to see how that sustains over time. We've seen a bit of a dip now, but it'll be interesting to see how players in our sector kind of adapt to that space. We've seen obviously more and more of our members selling solar generators and larger solutions that can act as backups for this kind of more industrialized market. Nigeria, so a lot of you guessed that this would be the country with the biggest increase. It was a smart guess, 30% increase. It is the third largest increase in absolute terms behind Uganda and Tanzania. Nigeria is probably at this point the biggest market for like larger solar home systems. And we expect it to be one of the growth drivers in 2025, 2026 with the DES Nigeria program. So to see this growth not only continue, but accelerate quite significantly. And I'll just mention Burkina Faso and then pause and hand back over to Susie, because Burkina Faso, I mean, we can't quite establish causation, but there seems to be a correlation between the recent introduction of a new regulation imposing quotas on imports for solar panels that apparently is applicable to solar home systems, and this crash in sales. And yeah, our kind of GOGLA's policy team is in touch with some of our members operating in Burkina Faso to kind of investigate and keep an eye on developments there. So I'll stop there. I'm happy to answer questions later during the Q&A, but I'll hand back over to Susie so that she can introduce our first panelist.
Thanks so much, Oliver. Indeed, please do put your questions into the chat. We'll have that Q&A at the end. We have three fantastic speakers who are going to be talking today. We have Jacob Lewandowski, the COO of D-Light, and in terms of Uganda, he's going to be diving in a little bit to that topic area and giving D-Light's experience of the market at the moment and the RBF in Uganda. We'll also then hear from Hack Sternblad from Sun Culture, who will be giving us the insights on the solar irrigation side of things. And again, touching a little bit about the dynamics in the solar irrigation market, but also on how RBFs are impacting operations there. And then finally, we'll hear from Patrick Lagrange, the CEO of Namine, and Namine particularly focusing on some of the hardest to reach audiences with a cash-based model. And we saw that very worrying dip in terms of cash sales. So Patrick sharing a bit of his insight and experience there, but also actually in relation to a results-based financing model, bringing in some insights also from the carbon markets, with Namine being really a pioneer in engaging carbon finance into this space. But first off, let me invite Jacob to take the floor. Over to you, Jacob.
Great. Thank you, Susie. Much appreciated, and welcome everybody to the webinar. Great to be with you today. Yeah, I'll talk a bit about Uganda and our experience there under the EASP RBF program. So D-Light has been in Uganda about 8 years, and in a lot of respects, it has many of the fundamentals that are required to be a strong pay-as-you-go operating market. There's strong mobile money penetration, 11 million households, of which somewhere around 50% are connected to the grid. And then GDP per capita, about $1,000 USD in terms of kind of spending power for the market. Obviously, the purpose of an RBF program is really to drive affordability and accessibility to individuals who are otherwise kind of excluded from the solutions available. And we have certainly seen an increase in the demand and just the general awareness for products as a result of the program. I think one of the things that we think went really well was some of the publicity and awareness around the launch of the program. It was a very targeted and well-planned kind of roadshow element to launching this program and really getting the notice out into the communities that would be most impacted by the RBF program and the demand side element of the subsidy coming in to address affordability for those customers. So I think that went really well. And as a result of some of that investment into both some above the line demand generation as well as some localized demand generation, we saw a large increase in demand for our products as well. We're participating right now in the solar home system category, the off-grid solar category that includes kind of tier 1 and tier 2, where there is a demand side subsidy component, and then there is a kind of infrastructure component, a logistics component that comes in based on the distance from distance for the customer that's getting registered. So I think those are the things that have gone really well. And with respect to driving affordability, the subsidy's been very generous in that. That has really increased demand, but that kind of flips over to the other side where the sustainability of the program has been something that we've been advocating for continued sustainability for the program. A couple of the other things that I would mention just in terms of kind of improvements and things that we'd like to see moving forward. There's some misalignment with kind of tax policy and regulatory policy. Some of the players in the industry who are active in Uganda will know around some of the changes around the stamp duty that came into effect just before this program launched, effectively adding an additional tax onto any kind of financed contract within the market. So a pay-as-you-go contract was both getting more expensive from a regulatory perspective at the same time as this program was coming in to try to drive affordability. And so a little bit of a misalignment there. And GOGLA has been very instrumental in advocating for a change in that and advocating on behalf of the industry. I think I'll speak a little bit about just longevity in general, and as a business who's planning to participate in these RBF programs. Obviously, we are very excited at the prospect of demand side subsidy coming in to drive affordability for our customers. We believe in the life-changing impact of the products that we are putting into these markets. We believe in the impacts that they make in the lives of customers in these communities and small businesses in these communities. And so enhancing that affordability is fantastic. And as a business, what we need to do to plan for those sorts of programs is we need to plan a lot of inventory to be able to capture that program, to be able to get product in place. We need to hire the requisite teams on the back end that are required to not just get the product to the customer and installed, but all of the back office teams, the teams who do the logistics, the teams who do the customer onboarding and the customer support, the teams who are going to be putting shops and locations that these customers can actually access for follow-on support if they need that. And so that all requires investment from a working capital perspective, obviously the building up of the infrastructure, but also just the direct investment that's required in the inventory itself to build the inventory, to import into the country, to get it into the right locations. And so, having clear visibility on timelines of payment and longevity of the program, those are really essential in terms of planning. And so we continue to advocate for as much visibility as possible into payment timelines and into the longevity of the program. I think there's been some healthy discussion in the industry in recent weeks and months around the right demand side subsidy level. And I think there are several opinions about where that should be. I think from our perspective, the most important element in planning for this is some confidence on the longevity of the program. And we think there can be some variation in where that demand side subsidy level gets set. It's really about the longevity of the program that enables us as an organization, as someone who manufactures these products and does the customer onboarding, installation, and the payment collection, for us to continue to invest long term. So I think in terms of driving affordability, governments, people who work in the public sectors and policy, people who set policy, I think there can be some variety in terms of the level of the demand side subsidy, and based on income levels within a market and the fact that these products are generally speaking similarly cost around the world, there may need to be some variation in that demand side level. But really, the most important factor is the longevity and organizations being able to plan for multiple years to be able to build the infrastructure that's required to really address the opportunity. But I think in terms of Uganda specifically, I think the awareness, the demand that was generated as a result of that, and kind of the affordability that's been unlocked through this RBF has been incredibly positive for us. And we've seen a significant increase in individuals, customers that are able to access these products, afford these products, and ultimately be able to live with the impact that the products can bring. So we've been pleased with the program so far.
Thanks so much, Jacob. I think some very important points raised. I think we have the sales and impact data. I think you're really pulling through there the conversation around the impacts. And I'm going to ask Sarah, my GOGLA colleague on the call, if she can actually share the link to the overall data that we shared on our website and platform, where you might see some more of that impact side of things as well. Because of course we're seeing sales numbers here, but they're translating into millions of people getting access to electricity, and 10% of those also using their systems within a business or for enterprise as well. So just remembering there is a kind of another side of these sales figures as well, which Jacob's been describing. And I think really diving in as well to that catalytic impact we saw of that RBF scheme in Uganda in the numbers, that largest absolute number increase in Uganda, and particularly highlighting there some of that's fantastic in terms of affordability. We know that almost three quarters of customers or potential customers state those without access will struggle to afford without a subsidy. And we know there's also various different innovative models coming through, but as GOGLA, we're also really focused on this issue of sustainability of RBFs themselves, of access for customers, and of the marketplace for companies to be vibrant and thrive. And if any GOGLA member is not yet aware of our kind of RBF task force work on that, please do reach out to us as well. But thanks, Jacob. Let me hand to Hack, who's going to give us a bit of an overview of what's happening in the irrigation space, but also touch on RBFs as well.
Thanks so much, Susie, and thanks, Oliver and the GOGLA team to invite me for this for today. And it's great to be here talking to everyone. Yeah, I mean, obviously, as we saw, the numbers is not growing in the productive use, especially solar water pump space that we want. I mean, we are and from very low numbers, right? So the problem we have is that we are too small of an industry and we have too few players. If we will break those numbers per company, and it will be very clear to everyone that it's just a few companies that are more or less contributing to that numbers across Sub-Saharan Africa, which is a big problem because it's driving away capital, which is much needed. Equity, debt capital is driving away grant funding and donors. We need to really push the donors to continue for funding both from the grant side and patient capital and subsidized debt capital because of our ticket sizes that we're looking at. It is a big problem. And even though Sunculture has been quite successful in raising funds, we know this is the main contributor to smaller organizations that can't grow. They can't buy inventory. They can't grow the organization. And it's really, I think, what's holding back our industry and more or less the sales numbers. And of course, due to that lack, we've seen the competition on the grant funding has increased drastically. And of course, at the same time, the amounts available has been reduced. USAID, but across the board, everyone is reducing the budgets. So it's really a tough one. Obviously, we do have, see some changes in the market with this big World Bank program. There's in Nigeria, there's in West Africa, and then Ascent in East and South Africa, which hopefully will give us the longevity we need and hopefully also that can help the investors see positivity in this market. And I think, obviously, we don't need the numbers of the solar home system industry. Our impact per unit is significant, and we know we deliver real long-term change for these farmers. So yeah, hopefully we can continue to build the foundation of our industry, which is very much needed. And sorry, I have a bit of a cold. That's why my throat is a bit off. On the RBF side, obviously, yeah, we've been working on multiple RBF programs over the years, both in Kenya and more recently also now in Uganda. We take part in both the UCCC and the BGFA program in Uganda. And yeah, obviously it's been a breakthrough. Obviously our Uganda entity is more or less 2.5 years old. So very young entity, and it takes time to scale up the operation. It takes time to build awareness and trust, especially for productive use technology, which often is a newer technology. And it's even with subsidies, it's still an expensive and a big purchase for these farmers. As an example, in Uganda, I think we're down to like $240 for our cheapest product after the subsidy. So it's still for many farmers quite a big investment, though it's 100% making it more affordable. I think GOGLA has done a big push, but this competition between different programs has been I would say almost it's a very good problem to have where you need to choose your programs, but it is also quite unfortunate because the industry needs funding as much as possible. And it's not good when this bigger, in this case, World Bank program is driving out the smaller donors because the smaller donor can't match a 60% subsidy. So that is a big problem. And we've been doing quite a bit and sacrificing also, to be honest, like some sales even or some price reductions to ensure that we can keep both the programs active. So that is a big problem. And of course, with this UCCC, some other challenge we have seen, which they are very well aware of, is around the timeline to get paid, which is not as big problem to us. But when we talk to the small organizations and the smaller companies being partake in these programs, that is literally stopping them from scaling up. Because it can be 6 to 9 months before you get paid from the date of you made purchase of the inventory, and they can't raise funds, so they have to wait to get paid back before they can buy new units. It really becomes this start and stop situation, and obviously, yeah, the currency financing hasn't for small organizations is really hard to get, even if it's subsidized by the World Bank. You know, obviously the verification process on the productive use side has been intense, to say the least, with 100% physical verification on every site, which is a really tough one, and it probably the reason why it's being delayed. I think obviously we have seen challenge with approval of new products and new pricing. So yeah, that's really specific to, you know, obviously UCCC, but you know, we are together with GOGLA trying to have a unified voice on how a productive use RBF program should be set up. And it's really, really key that we get this right. I think also in general, like some changes that everyone is very interested in IoT data, and we do see that a lot of programs now starting to have IoT data as the requirement for the verification of the unit. And there's obviously a very big interest in this, and it's great because it reduced the verification cost, and which hopefully should mean more money for RBFs, and it also reduces the timeline for to have the unit verified. But not every unit will be an area with connectivity, especially not for productive use, which is often out at the farmer areas. So you always need to have a backup. That is a big sticky point we've been having with some few RBF program, and something that you should really take into account. And of course, in Kenya, you know, we don't have the luxury of a big World Bank program, so we've been, you know, multiple programs at the same time. And of course, and ensuring that we don't double dip. It's the quality of your data needs to be quite good to manage that. And it is also very hard managing many small RBF programs, because everyone has different RBF level, which means new pricing. Everyone has different payment terms, which also means depending on how the payment terms is, you need to discount the RBF you reduce the product with. And also someone have different target groups, women, no women, etc. And to keep this program line together is extremely challenging with communication within the team. So yeah, and I think I really want to echo to end this, you know, what Jacob was saying, like we would rather reduce the subsidy level but have programs run a longer time. I think is probably what we need to do, and that's why it's so important to set these subsidy levels in the right way. And for productive use, it's going to be really key, because if we have a program running for 10 years, you know, that's when an industry is being built and a foundation is created. That will also reduce the hurdles for when the program ends. The diff should be reduced, and it also will make easier for other programs to compete. You know, if there is a better alignment with what is a reasonable subsidy level per unit. So yeah, that's some thoughts on my side. Thank you.
Thanks so much, Hack. So really, again, ending on that sort of sustainability and the importance of that activity, but diving in as well to a few of the specific parts of RBFs that cash flow challenge, particularly acute for solar irrigation companies with their more expensive products. And then the challenge of interacting between programs and making sure that we're optimizing and being as efficient as possible there. So I did see there were some development partners on the call, so hopefully some thoughts there for you guys as well. Lastly, before I hand to Patrick, I think I was really struck. I get to see impact data all of the time, but I saw the recent numbers coming out of the productive use finance facility that was in the GAP impact report. And so I can't remember off the top of my head, but really impressive income generation numbers from the irrigation side. So I want to quickly check out if you have some time. But without further ado, let me hand to Patrick, who will dive into the Namene experience and give us a little bit more insight into that dip in solar lantern sales.
Thank you, Susie. Thank you, everybody. Nice to have you around. So we're going to talk about the Pico lights, the drop-in sales, and the Namene model, how to enable a successful cash-based model. So the numbers are not very good. I think Oliver shared a bit earlier a slide showing a drop of 32% in sales. This is linked to several reasons. I would say number one, the reduction of aid budgets. There has been quite a few changes in the international context, both in the US with the Trump administration, but as well in Eastern Europe, with priorities changing due to the current situation. We have seen as well funding envelopes shrinking. There's no RBF program strongly directed to cash products. We have seen as well on our side at the end of our RBF program, our carbon program in Zimbabwe, we could see minus 63% in the slide shared earlier, but as well in Namibia, where we were market leader with north of 90% market share. In Namibia today, I think only 10,000 solar products are sold during the 6-month period. It was about 100,000 in the previous period. So all that put together has led to this sharp decline. But I think one thing to highlight here, that does not reflect a change in the need for the customers. It reflects a change in the support for those customers. So it raises a bigger question for me, is actually how do we provide energy access to the hardest to reach, those who can only afford buying cash sales products, those for whom PAYGo, while being a valuable option for many customers, is not a valuable option for them. So I would like here as Namene to be the voice of those who are left behind by the current energy access models and try to find with the industry how we can shape better solutions in order to address the needs of the customers who represent the majority of the customers. To understand better the dynamic, I think we need to look at first at the role of PAYGo and small systems within the industry. So PAYGo, it seems to have been extremely popular about 10, 15 years ago when GOGLA started in 2012, if I remember is correct. There were lots of subsidies, there were lots of programs, and it allowed, I think, to educate customers regarding the power of solar, the ability to get free energy once the product was purchased. But PAYGo is not the past. It's not because the models have changed today, but it cannot achieve the same success for the customers. We see it instead as a first step on the energy ladder, which we know deliver immediate impact. Lighting, safety, education, health, productivity, savings, don't need to buy kerosene and lanterns. So lots of benefit. And it's not Namene talking here. There are multiple reports. I'm thinking about 6 decibels, the Why Off-Grid Energy Matters series, which shows consistently that PAYGo has the highest impact per dollar spent. So it is a valuable option, and it's probably the only valuable option for the poorest. So I would see here PAYGo in terms of business model as the foundation for an inclusive energy access. However, while it's proven that the model works, while it's proven that the model is the only solution for a large majority of the customers, there is no funding for it today. The funding goes towards what I would call the Tier 1 matrix initiated by the World Banks, which by design favors larger systems, longer contracts. It's logical as a funder, I've been an investment banker myself in my early years, to think about deploying larger sums, to think about optimizing transaction cost. But by design, it leans the funds towards bigger systems, towards systems which can deploy cash faster. Consequently, the customers end up with products which are often overspecified, which contain tracking devices, but at the end of the day, they need light and a bit of charging facility. So the shift in funding has led to a shift of products. But it's not the shift of the customers which have changed. It's the funding which has made the change for the customers. And what we have read recently, written very eloquently in the SMAP report, published about a couple of months ago, is that 75% of the customers today, even with a stretch, I think it's 85% without a stretch, cannot afford buying a PAYGo product in rural areas. That's a number which shows that today we have built a system, a funding system, which rewards first scale and complexity, but sadly penalizes affordability and simplicity. And this model today does not address well the needs of the large majority of the customers. So now I have my magic wand moment. Not sure it's gonna work, but we can give it a try. So if we shift the lens now from a funder-centric model, and see everybody laughing, and maybe it's gonna work, to a customer-centric model, we have a totally different picture. We have a picture where cash models, lay-by models, I'll come back to it. They offer a scalable, trusted alternative which can connect directly funding with impact in a better, in a stronger way. Then the words I'm using, cash, lay-by, I'm not creating new words here. Everybody has traded in cash for years, even in our industry. It has changed in the last 5 to 10 years. Everybody has done lay-by for decades in other industries. I'm thinking about agriculture, to buy your crops or fertilizers. There are lots of programs, even now, an Apollo program in Kenya to buy fertilizers in 2025. They are buying clothes out of lay-by models, usually second-hand clothes. And this model is proven to work. And yet again, it's not Namene talking here. I can quote 60 decibels. They ran a study in 2023 across, I think, 25 or 28,000 customers in 25 countries. And it proved that cash-based models outperform PAYGo in satisfaction and affordability. And it's even more valuable in low-income environments. Then coming out of our industry and taking another industry, telecom. So the GOGLA of telecom is called GSMA. It's an old association. They are here, I think, in the 90s, mid-90s. And they developed a program with connections to what we do here, which is called the Mobile for Development Program. And this program highlights very strongly that lay-by is a flexible customer-led model, which is preferred in low-income environments. So today, we know that those models work for other industries. We know that they have enabled hundreds of millions of customers. I think on the GSMA side, we're talking about 250 million, to access a device which can change their life. But more importantly, they have allowed to return to smaller, high-impact products with a strong outcome per dollar spent, again, referring here to 60 decibel study. And not only they do it, but they reduce business risk because you don't have to spend a lot of money and time to chase credit losses. We have about 20-25% of the funds today paid by the customers on PAYGo, which go towards chasing or paying bad debt. So a product sold under PAYGo, just to give a number, and we talked about subsidies before, and Jacob welcomed the RDF program, which can be a tremendous impact for the customers in Uganda. But a product sold under PAYGo would cost about 50% less to 60% less if it was sold under the lay-by model. And the lay-by, for clarity, I've not defined it, is just buying the product in 3 installments, 4 installments, 3, 4 months, very short, cash-based. You get the product after you have paid, like you do for clothes, like you do for telecom, like you do for fertilizers. Then it works. That's a statement. It works in other industries. It worked in the past in our industry. But the question is, how do we scale it? Why doesn't it scale today the right way? The first reason is RBF. We talk a lot about them. Many times RBF, if you look at PAYGo, it's not there. You look at, PICO, not PAYGo, it's not there. RBF are not directed towards PICO. I'm not saying there are not exceptions, but it leans strongly towards the PAYGo component. And consequently, the cash buyers are excluded. Then there is a big question here. Are cash buyers excluded because RBF do not work for cash buyers? And here I want to say a very firm no. Why no? Because we have proven the opposite. Carbon finance has shown that performance-based subsidies can work for PICO. We have deployed 2 million lights under carbon programs. We have managed to acquire 50, 90, 80, 90% market shares in some of the countries, Namibia, Zimbabwe, Zambia, etc., in our sector. And we know it works, and we know as well that it's aligned with between the company and the customers. We get our subsidy if the customer uses the product. So that says, what can we do? It's my last minute. Thank you for reminding me, Oliver. So here it's a GOGLA webinar. We have many members of our industry here. Investors, companies doing lighting, companies doing agriculture, etc. What can we do? We are here as an organization, as an association to accelerate energy access. So that means that we are here to reach everyone, not just the 25% who qualify for debt. So as an industry, we should lobby, influence, such as the funders, the policymakers, recognize PAYGo and entry-level solar home system as a legitimate and impactful access model. We need to design the RBF to include the cash buyers. We need to stop using tier one as the filter that exclude the poorest, which is the case at the moment. And we need to build RBF, which are outcome-based, which align the interests of the companies and of the customers. If we get it right, and the stakes are really high here, we don't just revive the long terms, we unlock an opportunity to build an inclusive foundation for energy access. And on top of it, I believe we improve the quality of PAYGo because it's not now the only path, but it's part of a broader customer-led ecosystem. So thank you. That's my comments on the solar long-term market.
Thanks so much, Patrick. And I'm going to invite people to add some questions into the chat. Maybe we can get 1 or 2 questions. And just to say, yes, indeed, a passionate plea to within RBFs not to forget the cash model. That is a very concerning drop in numbers. You know, fantastic to see that RBFs are having an impact on the RBFs, so on the PAYGo side, but concerns around the cash, that drop in cash. And then we've talked a lot about, you know, sort of tier one and that sort of, you know, narrative around what constitutes as a connection, but certainly the Lantern and the PAYGo products as a first step, maybe not a connection, but as a first critical step, very, very crucial also for creating impact for the hardest to reach communities. Patrick, sorry, Oliver, I see your hand up.
Yeah, there's one. We have one question on the chats, and I think we only really have time for 2 questions anyway. We have one question from Eva for I think this is more squarely for SHS, Lanterns, and PAYGo. So either Patrick or Jacob, around challenges with repair and ability, notably of, I guess, lack of local technical knowledge and ability to repair products. And the question of how can the private sector help improve repair services to ensure product sustainability in remote communities? Yeah, I don't know if Patrick or Jacob, one of you wants to jump on that one.
Can I have first go, please, Oliver? So, I mean, first of all, repair works if the products are designed to be repairable. So I think at first we should all, and I'm sure Jacob will make the same statement, design products which are easy somehow to repair. You don't have to train people for that long for them to be able to proceed. Second of all, back to what I was saying earlier, if you have incentives to repair, by design, there will be more repairs. In the carbon RBF, if a light does not work, we don't receive the subsidy. So our incentive is for the product to work until the lifetime of the carbon program, which is up to 7 years. So with the right incentive and the right design, I believe that repair can be achieved by the private sector because it aligns the private sector interest with the customer interest.
Thanks, Patrick. Actually, I have a question for you, Jacob, kind of in reaction to everything, and feel free to also touch on the repair thing. But in reaction to all that Patrick said earlier around, you know, cash and its role, obviously D-Light has a wide array of products which goes from very small, like reading lamps and lanterns, all across to larger SHS and even generators. How do you kind of think of, you know, those different aspects of the business and yeah, in relation in particular to Patrick's points around, you know, where the support is going?
Yeah, good question. And I agree with Patrick wholeheartedly. I think lanterns are often forgotten in terms of their sort of easiness to deploy, the impact that they generate. And I think it's really important that they're considered. There was cash lanterns included in the program in Uganda, which was, you know, exciting to see. Excited to see that that was kind of catered for from the start. I do think what we see is obviously there's a clear customer preference for more and higher utility from the product, right? So I'm sure, Patrick's products that charge, mobile phones are more popular, and customers are going to continue to reach for that. And so, we view our role as making sure that those options are available, presenting those options to the customer, making sure that we are kind of protecting the customer by not over indebting them. But at the end of the day, allowing those individuals to make the choice. And that's why we have sort of the range of products that we have. And we've continued to stay in that PAYGo space because we do know that there are certain groups of customers for whom that is, by far the most impactful and achievable solution. So we'll continue to do that. But as Patrick mentioned, we do also subscribe to the theory of this being a ladder or a staircase, right? That getting that first cash product, isn't necessarily the end state, that there are savings that are generated, there's impact that's generated immediately that can then be converted into higher levels of utility. And we see lots of our customers doing that, graduating from cash lanterns to their first entry-level solar home system, graduating from an entry level to a higher level that powers some of the appliances that we've mentioned on the call. So we very much look at it that way, that it's a staircase that we want people to be able to walk on. And where you enter is dependent on circumstances and location, and we want to be able to continue to provide access to higher levels of utility for the customers as they can move up that staircase.
Thanks. Very clear, Jacob. I'm afraid we're running out of time. We ended up having quite a lot of discussions from the three companies. And I think there's a couple of closing statements that Susie would like to make before people stop dropping off too fast. So Susie, back over to you.
Yeah, very quickly, just a big congratulations actually to our raffle winner who participated in the data collection. So a huge thanks again to all of the companies that do. And the raffle winner is, drumroll, ENEOS. So congratulations to ENEOS. And exciting that we can announce that the raffle prize of a GOGS for 2026 ticket is made on the day that GOGS for 26 location and date is announced. So you can see that on your screens now, 27th to 29th of October next year in Kigali, Rwanda. So begin to make your preparations and plans. We very much look forward to uniting the industry around that time. And with that, let me also just thank all of the speakers that we've had today. Oliver for presenting that data. Please do let us know if you have any specific questions you want to pose into GOGLA at the end of this webinar. And then please do take part in the closing poll, which is on your screens right now. But thanks again to everyone for participating. Thanks again to our speakers, and I wish you a very good week.
Thanks, everyone.